Borrowers received a double win today. Firstly, the Reserve Bank has seemingly cleared the path for an official interest rate cut next month. But we also heard from the banking regulator APRA today. It wants to relax the way banks assess the serviceability of borrowers. So assume a mortgage rate of 3.9%. Current rules stipulate that the banks create a buffer to gauge whether a consumer can afford a home loan. Now, that buffer is 2% above the mortgage rate or a rate of 7%, whichever is higher. Given mortgage rates are now at historical lows, APRA is proposing to scrap the 7% floor and instead lift that 2% buffer to 2.5%, and that could have ramifications. When APRA introduced tighter lending rules in 2014, house prices were high, households were taking on greater debt and interest rates were falling.
What we've seen is borrower capacity being consistently constrained. But now that we're at a point where basically the banks are really tight on underwriting.
The housing market has reversed in the past 12 months. Home loan approvals are down 18% on a year ago. But the banking regulator has already begun unwinding some of its rules.
The first major move was actually back in December when they lifted the interest-only lending restrictions.
Now it's launched a 4-week consultation to readjust the way banks use buffers to assess the serviceability of a loan, which may benefit borrowers.
Well, at the margin, they can be able to borrow more, particularly owner-occupiers.
Only 10 to 15% of people borrow the maximum the bank will allow them, and experts say the risk of overextension has been reduced.
Bank underwriting's really improved, so they're doing much more heavy checks on income and expenses, and it's a lot harder for households to overextend.
It may help to heed the current slide in property prices.
I think today's announcement by APRA plus a surprise election victory by the Liberal government will mean that the bottom's coming sooner in the housing market, sooner than what we initially thought.
The easing of lending restrictions comes as the market braces itself for a potential official interest rate cut. Speaking in Brisbane, Reserve Bank Governor Philip Lowe acknowledged that a lower cash rate would support employment growth and inflation.
Given this assessment, at our meeting in 2 weeks' time, we will consider the case for lower interest rates.
That may encourage more people into the housing market.
We're going to see a lot more competition in the market, so if you are looking for a good rate, look for something that begins with a 3.
And may help the banks.
The surprise at the election, the change in regulation and the potential for lower interest rates are all combining to see banks re-rated, and we could see further gains for bank shares over the coming days and weeks.